Hey, good evening and welcome to this Q&A with myself, Saj Hussain. First of all, I'd give a big shout out and thank you to Guv for inviting me to come on this evening and share some of my knowledge and experience with you. And also the amazing work Guv is doing in terms of this community he's put together. When he initially asked me to speak and I had a quick peek in the group, I was just amazed at how much engagement he's got in there, and you guys seem to be doing a phenomenal job in terms of helping and supporting each other, which ultimately what a community is about. The reality is this property community isn't huge, and if we can help and support each other along the way, that's absolutely what it's all about. So I'm here this evening, half an hour or so, to help you in whichever way I possibly can to get you further, faster in your property journey. So fire away whatever questions you might have. I have a screen over here so I can just glance at questions because my eyesight's terrible, so I've got a huge screen over here I'll be glancing over to, so I can answer your questions for you. So in the meantime, while we're just waiting for questions, I'll just give you a quick little bit of background on myself, just so if you've not come across me before. So I've been in property about 14 years now. I'm based in Birmingham. Prior to that, for about 15 years, I ran my own IT company as well. So I've pretty much been running my own business for nearly 30 years. I know what you're thinking, it doesn't look old enough, right? I wish. So nearly 30 years I've been running my own businesses. So I've learned a huge amount during that process. I did very, very well with the IT business when I started it. And then due to a series of bad decisions on my part, I put the business in bad shape and ultimately come crashing down, wiped myself out, pretty much started from ground zero when I started in property. We were also at height of recession then, this was 2006, 2007, when I started getting involved in property and interested in property. And to be fair, it took me about 2 years before I really got going. I struggled with lots of different challenges. So as a newbie getting started, I really understand, what you might be going through right now. At that time, we didn't have these huge forums. There used to be some networking events, a little bit of activity online, but not a huge amount. So you're absolutely fortunate to have a community like this that can help and support you in your property journey. So when I got started, the first thing I started getting very good at is building relationships with people, and very quickly I got a knack for being able to speak to sellers and negotiate deals. So I was sourcing properties for a little while. From sourcing, I went on start doing some joint ventures where I was keeping properties, single let properties. Then I moved on to smaller HMOs like 4-bedroom HMOs, and then bigger HMOs like 6-bedroom ones, which is what I've still done for quite a long time, still continue to do now. Started flipping properties along the way, and as the market changed, I kind of evolve and my strategies as well. I think the important thing to remember in property is that the only certainty you'll get in property is constant change. You've got to be ready to adapt and evolve with the property market as the market changes. I've seen many people get stuck, get their fingers burnt, and absolutely get wiped out as well because they're stuck doing one specific thing and they don't adapt when the market changes. Sometimes something works really well for a while, but when the market changes, you have to shift and pivot as well. It doesn't mean you do a complete U-turn, but you have to adapt. So for example, in Birmingham, they're introducing Article 4 next year. What that means is creating more HMOs is going to become a challenge. We'll have to go through planning permission, and I suspect that's going to be exceptionally difficult because Birmingham City Council are not really a big fan of HMOs, so I can't see them approving very many. So our market there's still a demand there, but because some restrictions within the market now, such as Article 4, we'll have to adapt and change our model. And that's what I mean about being able to change and adapt. So HMOs I've been doing for a long time, as I said, flipping property, and then also development, some commercial conversions. I'm building new houses as well right now as a project. So quite a range, a mixture of things. But the thing that is, when I started, first of all, in property, and I got started, as I explained my kind of backstory, I started absolutely no money whatsoever, just a desire to want to succeed in property. And that desire came from the most wealthiest and successful people I knew at the time, whether it was my friends, whether it was relatives, whether it was my clients. I saw many of them keeping money in property. And I was always a big fan of the Sunday Times Rich List. And when you look at the Rich List, there's so much wealth is kept in property. And this is what got me curious about property. But the thing is, I was knowledge hungry and I was eager to do stuff, but I wasn't really getting results. The shift really came for me when somebody kind of guided me through the process by the shape of a mentor. And really what they helped me do more than anything else was just get absolutely focused. Because what I was doing, I was going along to an event, I'd learn about property, maybe be at a networking event, I'd see a speaker talking about Pacific strategy. They might be talking about, you can buy a house for £1. I'm thinking, fantastic, that's the strategy I need to follow, right? We'll be buying a house for £1. But 2 months later, I'll be hearing another speaker, they're talking about buying houses, no money down. I'm thinking, forget the pound, I'm going to be buying houses, no money down. And I'm just jumping around from strategy to strategy. And you may be able to relate to this. And that's where I struggled for about 2 years. And the focus, by focusing on one specific strategy, which for me was sourcing direct from vendors at that time, is what really helped me get momentum and start moving forward and building up, if you like, a rhythm of being able to do deals, some contacts, connections. People start seeing you as being stable as well. So look, that's enough about me, because this isn't about me this evening. This is about how I can help you. So I'm just glancing over to see what questions we got. So Louise Gibbs has got a question: do HMOs make up the majority of my portfolio, or is it a mixed bag? So yes, Louise, most of my property that I hold tends to be HMOs. I've still got some properties that I acquired years and years ago, and deals I picked up. I did quite a lot of lease options for a period of time as well. And when I look at my portfolio, why I've got some of those properties, I ask myself as well, why have I got some of those properties in my portfolio? The reality is some of those deals I did just because I could do it. What I mean by that is I might have been speaking to a vendor about a property, and I'm talking to them about maybe I could structure this in some kind of lease option, and they're thinking, yeah, this could work for them. And I'm thinking, great, I've got myself a lease option. But actually, why? Why did I even need it or want it, or did it even fit in what I was trying to do? Is it giving me the cash flow I need? Don't get me wrong, some of them have been amazing deals. But I've done deals along the way as well, where I did them just for the sake of doing them because I thought I could do them, and it was more a vanity thing. I'm doing deals. But reality now, when I look at my portfolio, the vast majority is high-yielding HMOs, because that's what I'm focused on. If I'm keeping them, they need to be producing a really good income. Otherwise, what's the point? So yes, most of my portfolio is that. I still have some flats, some houses in the portfolio as well, but generally that's what it is. But I bought and sold numerous different types of properties over that period of time. So if I'm not holding the property, I'm not so fussed what it is, because it's about the exit and what profit that will generate for me. So hopefully that's answered your question, Louise. So Gov's got a question: do I prefer landlords or agents? So Gov, just clarify what you mean for me by that, and then I'll hopefully answer that question for you. So look, I'm here this evening answering your questions. I want to help you in whichever way I possibly can. And as I said, over the last 14 years, I've learned a huge amount about lots of different strategies. In fact, as I said, for the first few years, I was just obsessed by knowledge. It was about, I need to learn stuff. I need to know all this stuff, because I had this fear that actually I can't go out and do anything until I know everything there is to know about strategy before I can go out and do it. But the reality is, it isn't about that. You've got to know enough to be able to get moving. And yes, a little knowledge can be a dangerous thing, but actually by trying to wait until you know everything is not the best way forward as well. I'll be the first to put my hand up and say, look, I don't know everything there is to know about property. I've got a huge amount of knowledge that I've accumulated and learned and experienced through property, but I don't know everything there is to know. I'm always learning, I'm still improving in terms of what I'm doing. But we need to know enough to be able to move forward on the whatever strategy that is that we choose. And otherwise, it can be very easy where you end up in a situation where you're kind of just collating information and data, and then what happens is you're analyzing and you reanalyze it, and then analysis paralysis steps in, and before you know it, you're in a state of indecision because you've almost convinced yourself that you're not sure that it's this way or that way, because there's over analyzing of a particular deal. When you have a really clear criteria in terms of what you're looking for, so for example, I'm just looking at the screen. Some of those questions, are they disappearing? Some of those, or they? Yeah. Okay. So with the question that was asked earlier about my portfolio, I've lost my train of thought. I was just wondering why the questions are disappearing. So can we have a look, see if we can press the comments, maybe get those questions up, because I think they're disappearing. So Gov's one with regards to finding HMOs you prefer going through. Okay, directly through agents or landlords above. So Gov's question around working with landlords directly or working with agents, what's my preference? The reality is I prefer to do both. So what I mean by that is it's important to have multiple sources of leads, that I'm not relying on one source of leads to be able to provide everything for me. So I'm looking to build relationships with agents, and if we've got deals with agents, we'll happily do those. I'll work with sources, I'll pay sourcing fees for the right properties. We'll be marketing direct to vendors. If we get deals coming from direct vendors, I'm happy to do them. I'm ultimately interested in getting a deal. Where it comes from, or the method that it goes through to get to you, is less important, and it really shouldn't be important. It's about getting the deal. So if I'm If I'm looking to get deals direct from vendors, let's say the HMOs, one of the easiest way is to get hold of the HMO register, the license register from your local council. Now, some of them start cutting out the data, and they don't share that with you. You can always use the Freedom of Information Act to pull that card out, and you may be able to get the full register, and then you market direct to those landlords. Now, when I was teaching rent to rent probably about 7 years ago, at that time it was quite a new-ish strategy. I say new-ish in the sense that there wasn't lots and lots of people doing it, and everybody wasn't talking about it. So if we were writing a letter to a landlord, the landlord would ring up and say, "Where did you get my address from? How do you know I own this house?" They were just a bit surprised that somebody wrote to them about a HMO they own. But whatever it was, it got the conversation started, and that's what I was interested in doing. Right now, if you do that same thing, you write to a landlord, they might pick up the phone to you and say, "Yes, but why should I give the property to you? I've had 5 letters this month." So, you have to remember that, as I was saying, strategies sometimes evolve, and as the market evolves, so you have to do something a little bit different. So what we were doing before, we were standing out a little bit, we were tiptoeing on our toes to be slightly different from everybody else. But then when everybody starts doing this, it becomes ineffective because everybody's standing on their toes. Then you have to do something different. Then you need to get a soapbox and stand on that, right, and start shouting from there. So it's important that you're not just doing the same old thing everybody else is doing. It has to be different. And sometimes I've seen letters that go to landlords, because I also own a HMO letting agency. We manage about 500 rooms around Birmingham. So, we see a lot of this stuff that comes through our properties where investors are targeting landlords. And sometimes I'm really curious. I look through those letters and see what is it that people are proposing and offering. And sometimes I'll see those that are 2-3 pages long, and I'm thinking what they're trying to do is sell the idea of rent to rent in the written form. Look, unless you're an experienced copywriter, you are not going to be able to articulate, persuade, influence, and sell to somebody in the written form. What you want that letter to do is create curiosity, and you want one call to action, and that's for them to pick up the phone and start a conversation with you. That's all that letter should be doing, nothing else when you're writing letters direct to landlords. So it should be just something that gets their curiosity going and starts a conversation. So, for example, if everyone's writing letters about, "I'm interested in leasing your property or purchasing, and get in touch with me," they need to be thinking about something different. So let me give you a tip. For example, it could be something along the lines of, "I'm desperately looking to acquire a property on this street. If you can help me, please contact on this number." What do you think the owner's going to be thinking? They're going to be thinking ka-ching, pound signs in front of their eyes, that someone's desperate to buy a property. Maybe I can sell it to them. But you may not be a desperate buyer. It doesn't mean you're going to be paying a silly price for that property. It doesn't even mean you're looking to purchase that property. You're looking for one action, and that's they're going to pick up the phone, talk to you, and start a conversation. Now, remember, many deals aren't done on that first conversation. There's numerous follow-ups, and afterwards you've built up that contact information. You can follow up and maybe turn that into a deal at a later point. So that's just if you're dealing direct, if you're trying to source direct from landlords. Now, if you're working with agents, again, if I roll back to, say, around 2009, when I was getting quite active in terms of sourcing property, I'd go along to an estate agent, pop in, maybe take some cakes or snacks or something, and we'd sit there, put the tea on, and we'd be chatting there for hours. Literally just having a chat about property, the market, them, for hours, building a great relationship. Why was I able to do that? Well, the reality is the market was flat on its face. Nobody was buying property. No phones were ringing in the estate agent's office. Nobody was walking through that door. So they were more than happy to give me their time. Right now, the market's really strong. It's active. I'm talking about Birmingham. It may be different from where you are right now. But if I go into the agents now and try to do a 2-hour telephone conversation, they're going to throw me out. They're not interested. They've got 10 people queuing up going to buy the property, right? So you have to think about what's the right technique. And what really frustrates me sometimes with, you see this with a lot with mentors, when they're teaching old hat stuff, something that worked years ago at a certain moment in time, at a certain time in the market that doesn't work right now. So you have to take information and adapt it for where you are, the timing of the market. So right now, if you're going into agents, it's really, they want to see that you can move quickly, you can purchase. So that's what we're doing. That's what we're focusing on. So ring the agents and look, cash waiting in the bank. We can do this. It doesn't matter whose cash it is. They just want to know you can do the deal, right? And that's the thing we focus on now. We move quickly. If a deal falls out of bed, we're all over it. We're jumping on it to get it closed. Yeah, that's in terms of how we're getting deals through estate agents. And if you were doing rent-to-rent lettings, again, you need to give them certainty. You need to give them reasons why they should do business with you. So a great example is if you're looking for rent-to-HMO or rent-to-service accommodation, is as a business, you'll still be paying fees to the agent. As an individual applicant or a tenant that will be living in the property, they no longer pay fees because the fees ban that happened earlier in the year, in June. So tenants no longer pay fees. So they don't earn any revenue from an application, whereas as a business, i.e. you as a business taking on that property, maybe on a corporate let or some kind of arrangement like that, management agreement, a lease or whatever it is, you'll still be paying fees. So again, think outside the box in terms of why somebody might want to work with you as opposed to somebody else. So I'm conscious we've probably got lots of other questions I need to look at as well. So Calvin, can you just scroll through and just pick out some questions for me to do? So I've got a question, Guv's question, how many joint ventures, do you do many joint ventures where someone finances a deal, you do the work? Absolutely, that's been my core strategy for a very long time. Some people know me as the property joint venture expert, and where that's come from is really I've built my whole business by working with other people. So the reality is now, you know, people say, what do you do? My kind of elevator pitch is I use my time, my skill, my experience. I find fantastic property investment opportunities, and I partner with people who have got funds for us to be able to share those profits. So, and variations of that kind of pitch. Effectively, what I'm saying to people is say, look, I'll do all the work, I'll find the property, I do everything. As my investment partner, what I'm looking for is somebody to fund the deal, effectively just to share in the rewards, not to get involved and help me pick the wallpaper and, you know, what we're going to do, how we're going to lay it out. No, I'm bringing the experience, the knowledge, the expertise, the team, everything. All I'm looking for is investment. Now, it may not be exactly the same for you. You may be looking to work with somebody in the sense that they're going to be working together with you, whereas the way I tend to structure my joint ventures, I'm looking for a partner who's going to fund them. And when I'm raising money, it tends to be in two different ways. The one is a joint venture, as we just talked about, which is the sharing of risks and reward. So what that means is that if the property, let's say it's a renovation we're doing to sell on, and what happens is it takes longer and it costs more, well, the risks of that are going to be shared with the investor who's partnering in that project. So that's what we mean by sharing of risk and reward. And let's say, you know, we made more money than we were expected when we flipped that property. The investor is going to be receiving more, the funding investor, than maybe the initial expectation was. So you're sharing risk and reward. The other way I tend to raise money from private individuals is that by way of a loan. Much more straightforward, much more simpler, and we don't have all the challenges around the FCA rules, the Financial Conduct Authority kind of rules around raising money as well for investment. It's a fixed amount of money for a fixed period of time for a fixed return. So, for example, £100,000 at a rate of 8% for 1 year. Very simple. Most people understand it. It's nice and clear cut in terms of how that works. So, two ways of raising money from other people to do deals, and really I built my whole business by doing that. I just got very, very good at finding deals. And here's the thing, sometimes people talk about, do you find the deal first or do you find the investment first? The thing is, if you get very good at finding the opportunities, you don't have to worry about finding the money. The money will find you. You just have to be very good at finding opportunities, being able to articulate why it's an opportunity for somebody and how they're going to benefit by working with you. And when you're doing that regularly, people see that. Before you know it, especially with the power of social media these days, your message will just kind of spread out there and you'll have people that be interested in what you're doing. So, you know, I tend to be relatively active on social media, Facebook, LinkedIn, YouTube, Instagram. If you're not connected with me, connect with me on those. It's either the Saj Hussain or Saj Hussain. And you can follow me on those various platforms. But what I tend to do is just put out good content right now. That tends to be my strategy. I just share knowledge, share information, just as I'm doing right now. And you could do the same thing. You just share your knowledge, share your journey, where you are in property business, and people are watching you. You know, they're lurkers and voyeurs, as like, you know. So I've not been in your group very much here. So there's about 500 and something members. My guess is 500 odd members don't post regularly, but they'll be in there, they'll be watching, they'll be looking what's happening. So just because you don't necessarily get the immediate engagement, it doesn't mean people aren't seeing and watching you. So by just constantly sharing your knowledge, sharing your journey, people are seeing what you're doing, And you may have heard the term, the 7 touches to the sale. What does that mean? So when I was learning kind of sales years and years ago, it was about there needs to be 7 points of contact before a potential contact converts and becomes a buyer. So in this context, what we're talking about, so what you're offering, your product or your service, is investment with you. And the sale is when they invest in you. That's the sale that you're looking to occur. So ultimately, people need to go through a process of getting to know you, like you, and trust you before they're ready to make that kind of buying decision, i.e. invest money with you. What social media does is allow you to start sharing your message and allow people to get to know you, like you, and trust you before they've ever met you. How powerful is that? This is just by sharing your knowledge. Now, you might be thinking right now, well, it's okay for you. You've been doing this a long time. You can be talking about this, that. You can share your knowledge. You can talk about projects. But I've only just got started. If you're in that position, you are still in a great position because you can vlog your journey. You can share your message by what you're doing, what progress you're making. And, you keep it real by the challenges you face. And what people want to see is not that, hey, life's perfect and it's amazing and I never make any mistakes. The reality is you will make mistakes along the way, but what people want to see is how do you deal with those mistakes? How do you respond and react to those situations? That's what builds the real journey and story about what you're doing, and that's what will allow people to buy into you. So if you're looking to raise investment and just get started, that's absolutely the best way to start. So let me know if you're finding this stuff useful. Am I just waffling? Do you want me to get off? Kind of where am I time-wise? I'm just going to try and see if I can grab another couple of questions. So Andrea is asking, do I also source, invest, flips? And yes, so I'm doing flips where I'm adding value and selling on. Generally, I want to make significant cash because I still use other people's money. So I need to make enough money for me and somebody else as well if they're coming into that project. But as I mentioned earlier, the Birmingham market's quite strong. It's very active. So for example, let's say it was a HMO that I was looking to purchase. If I go back 4 or 5 years, I was probably paying £160,000 for the ideal type of Victorian 3-story property that I would normally buy to convert to a 6 or 7 bedroom HMO. Those same properties today I'm paying £250,000 for to purchase because the prices have gone up so much. Yes, the rents have gone up a little bit, but not necessarily in the same way. And because there's confidence in the market and because the market's booming, what happens is a lot more investors come to the market. There's a huge amount of money that's come up from London and overseas that's investing in Birmingham. So what that does, it drives up the prices and everything becomes much more expensive. So if you ever follow the auctions, the Birmingham auctions are really interesting to watch because they have this crazy strategy where they price, especially recently, they price the guide price very, very low. So for example, it might be £20,000 as a guide price for a house. The reality is you've got no chance of getting a house for £20,000 in Birmingham. But they put that in as a guide price because what they do, they try and create a little bit of a frenzy, some hype, and just get people kind of excited and talking about it and a lot of people in the room. And if you go to these auctions, it's packed. They're ram-packed with people. Actually, I've got a great tip for auctions for you, which if you remind me, I'll come back to in a moment. So what you've got is a room full of people and everyone's bidding for that price. Everyone's thinking they're going to buy that property. And what they're doing is, and the auctions understand this, people are bidding with emotion and not logic. What you should be doing is working out beforehand, what's that property worth to you? Right, to me, it's worth £200,000 because that's what I would be able to pay for that property and still do what I want to make a profit, whatever it might be. Don't worry about what everybody else is thinking. That's what it's worth to you, right? So in the auction, if it starts off at £20,000 and before you know it's at 220, you're out because it's gone past your criteria. But what happens is people keep bidding. That's kind of the craziness of the market right now. So to answer your question about flipping properties, yes, I'm buying, I'm adding value, I'm flipping where we can get them at the right price. So a few years ago, I was flipping a lot more. Recently, it's not been as many, only because I can't get the deals with sufficient profit to make it worthwhile. Because, hey, look, otherwise, what's the point? If you're going to do all this work, you've got other people's money in it, you've got the blood, sweat, and tears that's going to go into it, and you're going to earn £6,000 out of it, for example. Don't get me wrong, £6,000 is a lot of money. But, I'd rather earn £50,000, £60,000 I can share with somebody and make it worthwhile. So I think about adding substantial value to make it really a decent deal. So, for example, one of the ones I'm doing now, very close by to our offices here, we purchased at £150,000. It was a distressed sale, needs quite a lot of work onto it. probably going to spend about 120,000. So what are we in for about 270? The sale price is probably going to be close to 400,000. That's the kind of flips I'm interested in, where you can make substantial uplift in terms of that property rather than just a few grand. Because really the transactional costs are so high, the stamp duty, the buying, selling, holding costs, it needs to be meaty. And let's say, you know, there's so much uncertainty in the market right now. It could be that there could be a correction and there's a 10% drop in the market. A 10% drop on a £400,000 property, that's 40 grand. If you're not making a big chunk of cash, what's the point? So you've got to build these factors into it as well. So, I was going to give you a tip on auctions. If you're looking to raise money, and one of the best places to find money is in auction. If you think about it, if you go into an auction room, there might be 100 people sitting there, and there's 60 or 70 items in the catalogue. Or well, the reality is there's probably hundreds of people there with 60 or 70 items in the catalogue. Most of them will get sold. There'll be many people chasing the same deal that won't get it. And what happens? At the end of the day, it's only one buyer per lot. So there'll be many people that will leave that room that turned up in the morning with a big fat check in their pocket because they've come with cash with the intention to buy. So there's a huge amount of money in that room. So if you see people bidding for a property and they're unsuccessful, you want to go and talk to them. You want to just approach them and say, hi, I noticed you were bidding for that property. I'm sorry to see you didn't get it. Is that the kind of property you normally buy? Would you be interested in looking at deals if I was able to find something like that for you? And just spark off a conversation, right? The room is full of money. People sometimes say to me, where do you find money? And if you want to find money where most people don't look, it's an auction room. It's absolutely full of money. People don't go to the auction. Let me caveat that. 99% of people don't go into an auction room with the intention of bidding without having access to the cash to be able to bid for those deals. So I hope you're finding this useful. Let me know, as I said, this is making sense. So Kabir's got a question about how do you build trust with the investor for him to give you finance. So ultimately, as I said earlier, Kabir, it's about giving an opportunity to people to know, like, and trust. When's the last time you spent money with somebody you didn't like and you didn't trust? We don't do it. We spend money with people we like, feel we know them, and we trust them. Let's say you were going to buy a second-hand car and you went into the car dealership, the second-hand car dealership, and you were looking around and the salesman came up to you and you really didn't feel, you know, that you were connecting and the person was just being a bit pushy. It's very likely that you'll walk away. Why? Because you don't like them, you feel you don't know them, and you can't trust them. That's because this is all going on in the back of our minds without us even thinking about it, without us realizing it. Subconsciously, that's what's going on. So when someone's investing with you, you have to be conscious of the fact that you need to allow them to get to know you, like you, and trust you so that they're ready to do business with you. So how do you do that? So one of the things I mentioned earlier on about the power of social media these days, you know, I'm guessing looking at a group like this, there's a lot of guys probably half my age, a lot of people probably half my age in this group. You know, you're born and brought up with social media, right? So it's part of your life, it's ingrained in you, utilize it. You know, when I was a kid, the only real big advertising medium was TV, and we only had 3 TV channels. Can you believe that? We only had 3 TV channels. I'm really showing my age now. And then Channel 4 came along, and then Channel 5, and then everything changed. By that time, there's 3 TV channels. The biggest medium to be able to get your message out was ITV. Yeah, ITV, primetime TV, say, for example, on a Saturday night at 7 o'clock, you'd pay a fortune to get a 20-second advertising slot there. Why? Because that was the best way to access a huge audience. These days, you can access a specific audience through social media for what? Nothing, no investment other than your time. So use these tools to share what you're doing, share your journey. So was that Kabir? I think it's Kabir's message. I've seen some of the stuff you're doing. I think you're only 15. That's absolutely amazing. You know, if you're sharing your journey, your knowledge, I think you've already got a YouTube channel set up. So you're already way ahead of what most people will do. We have to get outside our comfort zone. People are sometimes shy about having a camera pointed at them, and I think Instagram doesn't really help. People have got all these perfect faces and everything, and if you've got a face like mine, it's perfect for radio. It's not great for camera. But look, I don't care, because you're not here to judge me on how I look. You're here how I can help you, and that's what you have to remember. We have to get over the fact that, you know, what people might think about us. This thing that we get obsessed about, how am I going to look, how am I going to sound? Forget it. It's not important. Get over that. Focus on sharing your message, focus on sharing your journey, because that's also important. That's what people want to see. So you start sharing your journey, then you invite people. So here's the thing sometimes people make a mistake of. So your process of people getting to know, like, and trust you is effectively your marketing activity. What that means is you're sharing the message. But then you have to invite people to you so you can move to the sales stage. All marketing does is generate leads for you. What sales does is allow you to engage in the conversation to close that into a transaction. In this case, we're looking at, say, investment with you. So you need to invite people to start talking to you and engage with you in conversation about how you might be able to help them or what they're doing. Now, before you do any of this, you've got to be thinking about what is the model. What is it that people are going to come to you and invest with you for? So, for example, I gave a quick kind of example of a pitch. I use my time, skill, and experience. I find fantastic property investment opportunities. I then partner with people who have the cash, so we can share the profit on those particular deals. So all I'm doing is that's a very high level, raising awareness on how people make money. But it might be much more specific. It could be a HMO strategy. It could be a flipping strategy, buy, adding value, selling on. Whatever it is, be clear about what the model is that you're going to do. If you're not clear about what it is you're looking for, what type of investment, what type of person, if someone says, great, I'm interested, so how does it work? And you think, I'm not sure, how would you like it to work? That does not inspire confidence, and somebody might be looking to invest with you. You should be very clear, right? This is the model. This is what I'm looking to do. This is how it would be when we work together. And then that gives someone confidence that you're at least clear around what it is that you want to do. Then they can decide whether it's right for them or if it's not something that they want to do right now, but at least you're clear in what you're doing now. I'm not saying that you're kind of blagging your way through this. You can be completely transparent and say, look, I've not done this before, but I'm working with such and such. You borrow other people's credibility. I'm working with such and such. That means you're de-risking it. Because at the end of the day, if you're raising money from other people, you have to think about what's their biggest fears. What's going to keep them awake at night? What's going to keep them awake at night is, are they going to get their money back? This is what people are concerned about if they're going to invest with you. So you've got to show how is it that you're going to invest their money, how you're going to look after their money. For me, I'm obsessed about how I nurture and make sure I look after other people's money, because look, my reputation is the most valuable thing I have. And if I screw up on a deal and I lose somebody money, I've destroyed my reputation, right? Because good news takes a long time to get that message out there. And when people are spreading bad news, it takes 5 minutes and it will destroy your reputation. So you want to make sure you've got a model that you understand, that you de-risk, that people can work with, that you can invite them to come and have a chat with you and invest with you. So let me give an example of that. So sometimes at my videos, you'll see I'll end it with something along the lines of, and say, hey, look, if you're looking to get involved with me, you're interested in working with me, and you have at least £50,000 to invest, ping me a message and let's have a chat. So sometimes I'll end a video in that way. What am I doing? I'm now inviting them for a call to action. I'm inviting them to the next stage of let's have a conversation and explore what can happen next and how we can work together. So is this making sense? Is this kind of useful? So Andrew's got a question. The best way to get direct-to-vendor deals for projects such as flips or buy-to-lets. So look, depending on where you are, Andrew, in the country, if I'm doing flips right now in Birmingham, as I am, if I think about it, my last probably 3 deals have come either from sources or agents. So they come from agents because we're keeping a very close eye on what's in the market, what's going out there. We're constantly talking to them. We're ringing them up and say, have we got anything in the pipeline? Is there anything that's interesting that we should maybe be looking at? Have we got anything falling out of bed we should look at? And with the sources, I just incentivize them. I'll say, look, this is what we're looking for. If you've got anything like that, I'll jump on it straight away. I'll commit to it. I'll take it. And here's the thing, I never let anybody down. There have been times where I've committed to something and I'm thinking afterwards, you know what, that probably isn't the best deal we've done this year. But it's a reasonable deal. And it's not as though we made a complete mistake on it. But what I do is I make sure I deliver, I see through, and I complete on that purchase. So people get to know you as somebody who's not going to let them down. So when you're looking for stuff that's direct to vendor, one little tip I can give you is if you're constantly speaking to agents, let's say you're ringing up your agents, let's say you're ringing up your local agent, and you're saying, I'm looking for something that's going to be X, Y, Z, you describe what you're looking for. Let's say it's a flip where you can add some value. Say, I've noticed you've got this available. And then you just start building a little bit of rapport, ideally try and identify who's the person that lists the properties, who's the person in that agency that brings the properties on to list them with the agency. Now, when they go out, do you think they list every single property? No, they don't. when they go out to see prospective sellers, they might list 1, 2, 3 out of say 5, 6. What happens to the others? They're not listed. Either they've gone on to list with another agent, or what's happened is they've decided not to sell right now. They're just kind of testing the market, they're getting a feel for it. So those leads you never get to see or hear about. Here's a tip. If you can talk to your agent, you can build a little bit of relationship. You can say to them, so look, hey, Fred, what is it you've been out to see this week? Do you think that might be a good fit? And they'll be saying, look, I might be getting this 3-bedroom here and there coming up. And if they give you a little bit of an idea of what it is, you could say, look, what do you think it's going to be listed at? I'll tell you what, go to your vendor and say to them, I know we were just talking about this, but I think I might have a buyer for you without even listing it. See, now you've got their attention. Now you've got a property that's not even on the market. Nobody else has seen it right now. And the agent is doing the work for you by trying to get this secured. For them, it's a brilliant win-win deal because it means that they get the listing fee and they never even have to put a for sale sign. They don't even have to take a photograph because you can commit to buy. That's a great way from being able to get deals in a very active market where there's a lot of people, there's a lot of competition. So how are we doing for time? Shall we do a couple of more questions? What's something, so Kabir's got a question, what's something you wish you knew when starting out? So here's I kind of touched on this earlier on, but I think the thing that I should have done when I started is to learn one strategy and stay focused on that and refine it, get good at it, get even better at it, and create mastery on that thing rather than trying to do 50 different things and actually get success in nothing. So really, it's a case of what I should have known is I should be focused and not be distracted. But here's the thing with property. Often, people get involved in property not because they love the architecture, they love the design, they like the idea of unblocking tenants' toilets. That's not what they get into property for. They get into property because they love the idea of the money that it's going to make for you. That's the appeal in property. Let's face it, most of you are here because the money you can make from property as opposed to the house itself. Yes, some people kind of enjoy property, the process, but the vast majority here because the money it can make. Now, when you're focused on the money as the outcome, you have to think about where does it fit in with the strategy that you want to do. How is it that you can then find the right strategy for you? What often happens is we get involved in property, we're attending networking events. So I run a monthly network meeting in Birmingham. I get about 100 people at that. I'll come back and talk about that in just a moment. But what happens is that people come into property, they learn a little bit about property, they open their eyes up to what's possible, sometimes blow their mind in terms of what's possible in property and the amount of money you can make. But then they get distracted by the so many different shiny pennies, i.e. lots of different strategies, and it's very difficult to then achieve any results. And that's the thing I see many people struggling with, that they lack focus and they're all over the place. And that's the thing that I absolutely suffered with when I started investing in property at the beginning. I was just trying to learn so many things, trying to get so many results, but not actually getting anywhere and not getting those results. So I mentioned my monthly network meeting. So first of all, let me tell you about why I started. So I've been running networking events probably about 9-ish years now, property networking events. And the reason I started running these events is because when I was early in my property journey, what I wanted to do is I wanted people to come to me. So like Guv's reached out to me to say, hey, can you come and speak to my community about property, help them with some issues, challenges, and however you can add value. I said, yeah, absolutely, I'd love to do that. And that was then my way of getting people to come to me and for me to start building some contacts, some connections. And then it evolved from there. I started to run network meetings. I worked with a property training company for quite a long time, and I did a lot of events for them. And then more recently, I've been doing my own for the last probably year and a half. And so my monthly network meeting in Birmingham is Saj Hussain's Property Meet, creatively named. So we get about 100 people there every month, and I cap it at 100. So it means that once the tickets are sold out, it's sold out. It's only 10 quid. It's in Birmingham. I get people from all over the country coming, although vast majority of people in Birmingham. I get people from Manchester, London, Bristol, Croydon, all over the place coming along to the meeting, because it's a great way to kind of network, connect, meet other people, grow your contacts, your connections, and of course learn about property as well and different property investment strategies. So by kind of growing and building your network is a fantastic way of accelerating your journey. Shall we do one more question? Let's just scroll through those. They move so fast I can't read them. So let's just try and grab a. Thank you for the great comments, by the way. Just drop down the list. I'll be with you in just a moment. Just trying to grab. We'll do one more question before I wrap up. You know what normally happens when you do these things? You get to the last minute, you say I'm about to drop off, and then you get like 15 questions bombarded at you. So stalkers, where are you? Come on, jump in. My next Scotty's asked my next working event. It's on the third Tuesday of the month that we have that. Can the newbies get a discount? Absolutely. If you're a first time at my meeting, you get a 90% discount. The ticket's only 10 quid anyway, so you get £1. And I'll tell you what, there isn't a network meeting you're going to go to where we look after you in such a way for such a little investment. Because really, I don't want the investment to be an issue. I just want people in the room that are really excited and energized about property. We get teas, coffees, biscuits, snacks throughout the evening as well. And if you want to have dinner with me afterwards, I tend to have dinner with 12 people afterwards. That's a VIP ticket there, 25 quid, which really just covers the cost of the meal. So I'll get Khalid to type in the link into the chat box. Louise asking about the format. So what I do is we have usually 1 or 2 speakers sharing their knowledge and experience about a particular strategy. Then we do a Q&A panel. And just like now I'm answering your question, I think the advantage of a Q&A panel is that if you're in the room, you've got a specific question you want answered. And if there's a panel of people that can answer that for you, particularly if it's on a specific topic, then there's no better way of being able to kind of get the information that you need. And sometimes we'll go to an event, we just listen to a speaker and we think, actually, I'd love to ask this, or I'm not sure about that, or how does this work? And you don't get that opportunity, and that's so frustrating. You actually leave with more questions than you started with. So I think the Q&A panel is always a great way to make sure you get your question answered. So we try and theme it. So this month we're focusing on how to start 2020 as a phenomenal year. I don't run a meeting in December or August. So this is our last meeting of the decade. Really, I'm going to be focusing on, I'll be delivering most of the content myself actually on the November meeting about how to really hit the ground running and smash 2020. So sometimes we have this massive amount of energy and excitement for about the first week of January. And we all sign up to get fit gyms, and come 1st of February, all the gyms are empty. Why? Because we lose momentum. So I'm going to talk about how you can build momentum and maintain it as well. So I think that just leads me to say, so questions coming in and stuff now. I just want to say thank you so much for, first of all, allowing me in your group just to kind of share some knowledge and experience with you. Hopefully you find it useful. Please reach out to me if I can help you in any way. I think my Facebook is pretty much maxed out, close to 5,000 people. So you can join my Facebook business page, which is The Saj Hussain. And look, come along to the monthly meeting as well. If I can help you in any way, please get in touch. And Guv, thank you so much for inviting me. You've got an amazing, very engaging community here. Thank you all. Speak to you all very soon.